Hey, this is Eli, aka Devoted Day Trader. On today's weekly recap, I'm going to continue doing a recap of my monthly challenge where I'm taking only one trade per day and sticking to a 3-to-1 reward to risk ratio. This is the week 2 of the challenge. This week I traded Apple today, which is a Friday the 14th, so happy Valentine's Day to those who celebrate the holiday. So the week started off kind of shaky with Baba, which was a loser. That was on Monday. On Tuesday I traded Roku, which was a winner. On Wednesday I traded AMD, which was unfortunate because my profit target didn't get hit by literally 2 pennies. So AMD ended up being a break-even trade. On Thursday I traded MU, which was a winner. So on today's recap, I'm going to go over my trades for the week. We will start with Apple, since Apple is on the screen right now, and it is the stock that I traded today. So Apple, I was watching it today, and it sold off since the open. Well, the first 5 minutes was a strong bullish bar, but there was no continuation and it sold off. So I went short on this pullback to the 20 EMA, which also coincides with the 5-minute 200. Seeing this tail, I went short, but I was stopped out, and this is unfortunate because I was hoping to have a winning day today. So I lost 1 hour on this trade. My 1 hour equates to 1% of my account, so I lost 1% of my account on this trade, and I'm not mad at it. Usually when a stock sells off this aggressively, usually the first pullback to the 20 EMA, usually it fails and you get a move to, at least a test of the low of day. But in hindsight, I should have realized that it bounced off this red dotted line, which is yesterday's low, and this tail and this bullish bar actually reversed yesterday's low. So I should have realized that shorting it here was probably not the best decision. And I'm actually pissed because I was watching the video right before I pulled the trigger on Apple, and Nvidia actually did what I thought it was gonna do, but I chose the wrong stock. So on Nvidia, I was watching it. I contemplated going long right here, but it popped up so quick that I felt it went without me, and it didn't give me a pullback. But this Nvidia trade was the trade that I should have taken, because I literally watched Nvidia for 10 minutes, and once I saw that this bear bar didn't close on this low and it didn't get continuation, and we had this inside bar, I hesitated and it went without me, and I decided to short Apple, which was a winner, which was a loser, unfortunately. So this week was a profitable week. So I believe I'm up 4% of my account, because I had 2 winners, which resulted in 6R, and I had 2 losers, which resulted in a total of 2 RE. So I made 4% of my account this week, which isn't bad. So let's get to the trade. Baba was the first stock that I traded on Monday, and seeing that it was selling off, I went short here with a stop at the break of pre-market low, this line right here, but it popped up so quick I didn't get a chance to get out, and I did not have my hard stop in, so I actually let it go past my stop, and because I reasoned most likely this 20 EMA was going to act as resistance and send the price going down. And once it came back to my stop, I got out for a loss of 1 hour. So this is actually what I was hoping to achieve with the Apple trade today. If I usually after a sell-off like this, the first test of the moving average, usually it fails and you could have a tradable opportunity to the downside, and that's what I was trying to do with Apple today, but it did not work out. But in this case, I was able to get out for 1% loss. So this was on Monday. On Tuesday, I traded Roku. Roku was a nice winner. So on Roku, what I saw was it opened bearish, but the bears were engulfed by the bulls, and so this was on, there was no follow through after this bear bar, and it made this inside bar, and I jumped in right here. This was a no follow through on a bear bar followed by an inside bar and a consecutive inside bar. So when I got in, this bar was inside of this bar, and this bar was inside of this bar, and it took off. This is a pattern that I've been paying attention to lately. So after a big bar, look for a inside bar and another bar inside of it. So in the NVIDIA trade, for example, which I was not in, it's the same play as that Roku play. We have this bar, and then we have this inside bar, and then we have this bar which was inside of this bar before it exploded to the upside. So this pattern and the Roku pattern are the same pattern. Bear bar, inside bar within this inside bar before it exploded. And that's why I should have been in that NVIDIA trade today, but it's all good. On Wednesday, I traded AMD, which is unfortunate because my stop was literally, or my target was literally missed by 2 pennies. I went short right here after this. So we had this sell off, we had this bounce that failed, we had these topping tails, and I went short here, and my target was at 53.51. The stock came to 53.53 and it bounced, and I got out for a break even. So Wednesday could have been a winner, but what can you do? On Thursday, I traded MU, which was a winner, and again the same pattern, that inside pattern that was successful on Roku, that was successful on NVIDIA today. So on MU, let me zoom in, which was a winner. So on MU, what I saw was, well, the stock gapped down, but it made a push up, and then the sellers tried selling it down, but this big trending bear bar closed with a tail, and it was followed by an inside bar. So this bear bar was followed by an inside bar, and then this inside bar was followed by another inside bar, a consecutive inside bar. Once I saw that, and I was patient because I was waiting for a better entry, because I thought it could potentially pull back, But once I saw that it pulled back and bounced off the 20 EMA, I went long with a stop at the low of this bar, and it gave me my 3-to-1 profit right here. And yeah, so that was the trade on Thursday, yesterday. So it's interesting placing only one trade per day, because it definitely eliminates emotion, because you only have one trade, one opportunity to place a trade, and you say your parameters and you walk away. And that's what I've been doing. Wow, look at this NVIDIA. This NVIDIA is just taking off. I was supposed to be in this trade. But it's all good. I'm not gonna place any more trades today. The takeaway from this week's recap is, after a big bar, look for a inside bar and then another inside bar inside the prior inside bar, and those seem to be high odd probability trades that actually work. And what else? Yeah, and sticking to a 3-to-1 reward to risk ratio has been profitable, because you don't have to have a high winning percentage to be profitable. So this week, 2 of my trades were winners, 2 were losers, and 1 was a break even, and I still made 4% on 4% of my account. So I made 4R for the week, and I will take that, especially if I don't have to be glued to my screen the entire day, because I could just place my trade, set my parameters, and walk away and do other things. And the beauty with this strategy is that it's scalable, so I could always risk 1% of my account, knowing that, as long as I'm betting about 40%, I can be profitable by the end of the week. And a 4% return on your account, it's not that bad, depending on what type of account you have, so if you have $10,000 of trading capital, 4% is $400. If you have 100 grand, 4% in 1 week, it's about $4 grand that you're making in 1 week. So not a bad way to make a living if you could stick to it. And if you have any questions or comments, feel free to comment below, and I will do another weekly recap next Friday to let you guys know how I'm doing with sticking to only 3-to-1 reward to risk trades and placing only 1 trade per day. Have a good Friday. Peace.